Have you ever been in a position that you take just loss after loss after loss? You're on the verge of quitting trading. You do have some winners here and there, but realistically, your losses do outweigh the winners, right? You have maybe you take like $100 loss, but you take a $50 win, and this just continues and continues, and you've just had it, right? I myself was actually in those shoes not too long ago, but I've experienced just that. I've experienced taking large losses, continuous losses, and having very small slivers of success and hope until I decided to break that cycle. It's very normal, especially as a newer trader, to be in a cycle where losses are the norm. It took me about a year to get out of this self-inflicting cycle that just churns and burns and eats away at both your mental capital and your actual capital. But the point is, I've come to a point in trading that now my winners, they do outweigh my losers, and that's exactly what I'm going to be talking to you guys about today. I'm going to give you a few steps, 4 to be exact, of how you can actually come back from those larger losses and break that cycle. Now, don't get me wrong, I still have red days, right? Even recently, I had a fairly large red day to my standard within my allotted risk management, but it's normal. As traders, you have to understand that losses are a part of this career, realistically, and without losses, you're probably just lying to yourself, or you're making very little gains with very little risk associated. If you've clicked on this video, you're probably in that state where you're taking loss after loss, or you're in a losing cycle, you're in a losing streak, and you're looking for something to help you turn it around. So I'm going to be breaking down those steps that can give you some kind of guidance as to what you should do or what you could do to actually flip things around. Now, I do want you guys to remember before we do start this that losses and taking losers, right, having red days are all a part of trading. No matter what level of trader you are, you do have risk associated with this. Now, how you manage the risk and how you keep the risk smaller is another thing, but it's not a career, it's not a thing that is associated with little risk to no risk. You have to understand that when you're getting into this, you accept the risk and that you are going to have multiple losses. It's a matter of how we look at those losses and what we do about those losses that can generate a longer term success in this career. So with all of that being said, I'm going to start this video and I'm going to break down 4 steps that you can take to turn those big losses into something manageable and eventually into a stream of profitability. I'll see you guys right after this intro, and don't forget, hit that subscribe button, hit that like button, and we'll be right back. So the first thing to recover from these losses that we do have to take into consideration is reviewing your strategy, right? Is it the strategy or is it the operator, right? You as the operator of the strategy, which one of these is not working? So there is a lot of situations that you have multiple losses, you have big losses one after the other, or you have just a stream of losses, and the trader usually sits there and starts blaming the strategy realistically. So they start looking at this and start changing things around. They're like, oh, the strategy's not working, I have to find something else that's going to work, this and that. They go strategy from strategy to strategy without really understanding what is going on. Now, the first thing that you have to do is review your strategy. You need to understand that this is a very concrete thing that you do have to follow. It's a plan that you do have to follow as well as you can. One slip up and it can be very detrimental. You need to sit back and review the strategy that you have been trading. Is it something viable? Right? Is it something that has a very good success rate if you back test it and test it in a simulated or a low size live environment? Is it something that yields actually long-term consistent gains on a back test period? Right? If it's a strategy that yields about 40% profitability and you need like a 3-to-1 risk to reward to actually make it work, maybe it is the strategy and it's something that you do have to consider and look for something else. You don't necessarily have to pin everything on the strategy, but sometimes it is the strategy that actually doesn't work in terms of profitability. Now, there's the other aspect where the strategy is actually good, right? There's a 60% profitability, right? You need a 2-to-1 risk to reward and everything looks good. 60% plus, for example. Let's say you look at the strategy, review the strategy, everything is good, but you figure out that, hey, you know what? I'm the problem. The operator is the problem. Because if the operator can't act in a disciplinary manner to actually follow the strategy and implement it as it's supposed to be implemented, well, then it doesn't matter what strategy you use, right? If the operator is not disciplined enough, everything goes out the window, and those losses can just get bigger and bigger. The operator, right, gets emotional, has like breakdowns, emotionally trades, revenge trades, and you just add to losers like this if you don't really understand what you're doing wrong. One of the main thing that is attributed to large losses and continuous losses in the trading industry is that the operator doesn't even know what they're doing wrong. So you have to understand that. Is it you or is it the system that you've been following, right? That is the base case to starting to solve your issue. Now, if it is the operator, you can take a few steps to actually adjust so you can actually follow this in a disciplinary action. And this is exactly what we're going to be talking about through the next steps. The next step is journaling and reviewing. So the second step, journaling and reviewing, is very, very important, right? It's one of the worst things that you could do is just sit in front of the computer, you trade, click, 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 maybe you win, maybe you lose, then you're like, okay, tomorrow's another day, and do absolutely nothing about it, right? Have you guys heard of the term of insanity, right? Doing the same thing over and over again, expecting different results. Well, this is the situation that you put yourself if you do not journal realistically. Journaling is a huge component because when you journal your trades, what you're doing is you're actually reviewing what you had done. You're reviewing the good and the bad, right? What did I do well? What did I do poorly? And you put those down, right? You have statistics. There's a lot of journals out there online that provide you ability to input your data from whatever platform you use. Like, for example, Sierra Charts with futures, you can directly input them into multiple different softwares. And what they do is they spit out statistics for you, right? You can understand what you do well and what you do poorly based on statistics, as well as based on reviewing where you took the trades and how you took the trades. Statistically speaking, if you're looking at your journal and let's say that your profitability is 60%, meaning that you win 6 out of 10 trades, right? But you're still losing. That in itself tells you that you're taking much smaller wins versus the losses that you take. So you close those losers out much later than you close the winners, and that's attributing to general longer term losses. So that's one example that you can get from a journal. You have to journal every single day, put everything broken down. Your trade plan, how you executed, your wins, your losses, why did you take the trade, what could have been done better, right? All of those things coming together in a journal give you the information that you need to understand that are you doing well or are you doing poorly based on your strategy. It all comes back to your strategy, because it's one thing to just journal jot everything down and just throw it in the back of the closet versus reviewing this journal and actually reading into the journal, understanding what is going on. You need to make sure that you're reviewing this journal, you're breaking this journal down, and you understand what you've done well, what you've done poorly, so you can take those learnings to the next day, to the next few days, so you can look to actually limit and mitigate the losses that you've been just throwing and piling up realistically. Reviewing is a huge, huge important factor because that is the difference maker, right? Sit down and compare your strategy, your trade plan to what was actually executed. Do they match, right? If they match, then why isn't it working? Why are you still taking losses? You have the statistics in front of you and there's an underlying factor of some sort. If they don't match, well, there you have it, right? Your strategy tells you can yield 70% return, let's say profitability, let's say, but you're out here earning 50, right? There is a difference if you're not following the strategy, right? You will have to adjust accordingly. When it comes to reviewing as well, I often do a replay of the day. So for example, trading futures on a day-to-day basis with a depth of market, with a volume profile, with all those things. I'm going to review and replay the actual day so I understand what had happened throughout the day. I learn from how the movement and how the orders interact with each other. I learn from my trades that I took based on the replay, and I can see other potential trades that I have missed based on the replay. So it's a very, very good review tool to add into that so you can actually learn from either your mistakes or learn from the things that you've done well, right? They go hand in hand realistically, right? Which leads us into our third step. Our third step, even though it might sound slightly counterintuitive to you all, is actually sizing down. So when you're sizing down, what you're doing is you're automatically taking one step forward to minimize the risk, and you're reducing risk. Sizing down doesn't necessarily mean you're going to be making much, much less profit, right? It means that you're going to be cutting down the risk in a very simple step. Often, people who take consecutive losses or loss after loss you can attribute that to oversizing or sizing out of your comfort zone or out of your ability or your account size even. When you oversize and you take losses, emotionality and mental stress get hit very, very hard, right? Emotionality and taking a large loss, you're looking at it, you're like, oh my God, I have to make this back right now. And you continue with the size, you oversize, and next thing you know, you've piled up a big steaming pile of losses, right? So sizing down allows you to really reel it back, focus on the risk, focus on the smaller risks that you have, and being able to actually trade what is in front of you. Sizing down allows you to lower the stress levels and the emotionality behind the trading and just be relaxed and understand what it is you're supposed to trade and how it is you're supposed to trade it. Right? Oversizing is one of the worst things a trader can do because they get uncomfortable very quickly and their mental state and emotional state get destroyed very quickly, and you can easily blow out in that sense. No matter what your level of experience is, a lot of experienced traders have sized up not based on their risk management, have seen massive, massive losses. And this leads us into our final step. It has a lot to do with sizing down, and that's focusing on the system in front of you and not making back the losses, right? If you have a sound system and a sound strategy, that should, in the long term, yield positive results, but it's not, right? You need to focus on that instead of looking at these losses that you might have accumulated, these losses that might have piled up, or even if it's just one big fat red day. Instead of thinking, I have to make this back, how am I going to make this back? What am I supposed to do to make this back? Let me size up. Don't focus on that. If you can focus on the strategy itself and the system itself, you can slowly get that back, right? You can slowly get back the losses, but that's not the point, the speed, right? It's not important how fast you can recover. It's important how well you can recover and how consistently you can recover, because everything is about discipline. You have to understand that you need to be disciplined enough to be able to follow your strategy so you can get back from a red streak, a red day, whatever it is. The whole point is being able to operate your system. Remember the first step that we talked about, is it the strategy or the operator, right? If the strategy is sound, you have to work on the operator themselves, right? You have to understand that the operator has to be able to follow the system and be focused enough and disciplined enough to actually execute. So when you focus on that, when you size down and you don't think about, oh, how am I gonna make these losses back, or very focused on the individual number, your mental state, emotionality gets repaired, and you can actually dive out of that revenge trading cycle and that self-inflicting wound cycle and actually jump into something that's very much more consistent. It is a difficult task, right? It's very hard to just push the numbers away, especially after maybe consecutive or one large loss, but realistically, that is what it takes to actually get into that disciplinary mindset and be able to focus on that. So with that being said, those are 4 main steps that I believe if you can implement properly, you can recover from large losses in the market. You have to understand that everything is very, very disciplinary, and you have to understand that a lot of the work in the market, right, and trading and being profitable is not actually done while the market's open and while you're trading. It's done outside of the matter. It's done with your review. It's done with the work that you do on yourself and the preparation that you take to actually take those steps to become disciplinary and be able to implement a strategy as a focused trader. So with these 4 steps, right, take them into consideration if you've had a big red losing day, if you've had multiple losses, and also take some time off. Consider taking the next day or even a week to kind of adjust yourself, mentally prepare yourself, go back, review, see what had happened, give yourself some time and focus on making it right. Focus on disciplinary action towards focusing on the strategy itself. So with that being said, I hope you guys enjoyed this and you learned a lot about this. If you enjoyed it, hit that like button, hit that subscribe button, and we'll be back with more videos. Just drop a comment down below. What else would you like to see from this perspective?